Good afternoon, Tradescores market scan video for May 25th. So it's a good question to ask, and that is, with the S&P and a strong upward trend, as you can see here, why is it that there's not many individual stocks showing good performance or showing us buy signals? Well, it's really a tale of two markets. You have large cap stocks, I'm going to call them boring stocks, that are slowly going higher as the market moves up, and that's the S&P 500, which of course is a market weighted index showing a long-term upward trend. But most stocks, beyond those large cap boring names, are really not doing all that well, and it shows itself when we look at something like the IWM, which is a small cap sector index. The 2,000 companies that make up the Russell 2000 are generally smaller companies. And you can see that that market has gone sideways for the last 3 or 4 months. And then the NASDAQ 100, which is our tech names and also tends to be a lot of smaller cap stocks, is going sideways. A lot of those hot alpha stocks come from sectors like the biotech sector. And the biotech sector did really well, up until a few months ago, but in the last few months has been moving lower. So the kind of stocks that can make big moves in a short amount of time are the ones that are sort of sleepy right now. And it's the boring stocks that maybe make 8-10% gains in a year that are doing well as the market itself is pulling higher. And I'm not crazy about trading those larger cap stocks. If you want to trade those kind of stocks, you're probably better just to buy an exchange traded fund on the S&P 500 and make the 8% or the 12% as it might be this year. But if you really want to get strong performance, well, then I would rather sit on cash and wait for these good trades to come along. They do come. There's not many of them, but we found a few. And of course, the results from the past year have been very good as long as we are patient and we don't jump into trades that are marginal. And so when I do these market scans every day, just keep in mind that I am being fussy for a reason. The market is not helping these, call them speculative stocks, the ones that can make big gains, but there will be some that come along from time to time. And as I go through these market scans, what I'm trying to avoid are the stocks that are breaking up into pessimism or the stocks that are already well into their upward trend. So when we look at a stock like this, it's breaking up into all of this resistance. Look at this, it's breaking up into pessimism. When I say pessimism, really what I mean are falling tops, and people tend to sell into those. On the other hand, we look at Saputo, which is a boring large cap company on the Canadian market, and it's been doing well for the last year, but percentage-wise, it's not that exciting. And so although it sort of resembles the performance of the large cap indexes, it's not that exciting. Bank of Nova Scotia, pretty good gains for a bank, but relatively boring. And through much of this move, there were places to make far better returns than owning a bank. And I'm looking for those names where there is a little bit more excitement, and there's not many of them right now, but that can change at any time. And so we keep plugging away with our process. All right, so looked at the Canadian market. There wasn't really anything there that I liked, and I've been able to give you a little speech on patience and the importance of being fussy when the market is not in a giving mood. And that lesson comes from having done this for 30 years. And as I go through these charts, these are stock charts that I would never buy if there were better candidates to look at. What's easy to do sometimes, an easy mistake to make, is to buy stocks that aren't great simply because you can't find anything better. This is a chart that is in an upward trend. It's pretty good, but it's risky because it is going parabolic. And I don't want to buy those risky trades. I would rather just sit on cash and do nothing than take something that has too much risk or take something that has a low probability of success as it moves up into resistance. So as I go through these, I'm looking for my typical formula, which is find a stock that was going sideways and then breaks from that sideways action with abnormal activity. Here we have JYNT doing that back in November at $25. Now it's at $70. Those are the real big returns that I'm looking for. Here I have a stock that's breaking from a little bit of low volatility, kind of choppy a few months ago, but something there that deserves further attention. So I look at the 3-year weekly chart, and there I can see that this stock has been trending higher for a long time. It is a good hold, but I would not enter here simply because I think the upside is less. The higher it goes, the closer it gets to its top. So I've done my market scans. I haven't seen much, but I've hopefully given you a little lesson on the importance of being patient. Let's just take a look at our current holdings. And generally we're pretty solid, relatively short list because we've taken profits on many of them. The one that stands out today is FTT, down about 4.5%. It's currently up 93% from when I featured it. It is getting close to some support. So it actually just about hit support today and hit a stop loss point, but it hasn't quite triggered. So it's still okay. And other than that, DRT up 8.4% today. When I look at that chart, however, I don't see any reason to move my stop. It's a healthy chart and remains a hold. Well, hopefully that's been valuable for you. We'll be back at it tomorrow. Trade well.